Hello everyone, this is Andrew McNair from SWAN Capital with our July 2013 Economic Update. In this month's video, we're going to discuss some of the factors that drove markets movements in July, as well as what to expect, maybe even the days and even weeks ahead. And as always, please be sure to review the following disclosures at the end of this video. Now, July was a great month for stocks, and markets ended the month in the black. And this was supported by the earnings reports and positive economic data that came out as of late. Now, during the month of July, remember that the Dow gained 4%, the S&P 500 just over 5%, and the NASDAQ increased by over 6%. This was fueled by second quarter earnings season, which began last month. And so far, the news is decent, but not great, and here's why. Although nearly 2/3 of the S&P 500 companies have reported so far and have beat earnings estimates, the view was so negative going into this earnings season that it has been easy to surpass such a low bar. So that's why it's good news, but not great news. The revenue growth picture is even less positive though, particularly among companies that count on foreign revenue. This means that businesses are still struggling with weak global demand. Even despite the mixed earnings results, business leaders, however, are optimistic about the future business environment that we're approaching. A recent poll showed that nearly 2/3 of CEOs expected stronger sales over the next 12 months. And we hope that's a self-fulfilling prophecy. Now, economically speaking, July was a pretty solid month. New jobless claims fell to their lowest level since 2008, and in the final week of July. Now, July is historically a volatile month for jobs and seasonal factors, like scheduled factory closings can make unemployment rates unreliable. However, hiring appears to be consistently steady, and we can hope for a reduction in the unemployment rate if this trend continues. Now, consumer confidence did drop slightly for the month of July, though the June number was revised upward. Digging deeper into this data, it seems that consumers appear to be generally upbeat about the economy and about their future prospects of the market. Now, if we turn our focus to the housing market, housing prices continue to boom while mortgage rates continue to rise. Now, if you've been shopping for a house, you know exactly what I'm talking about. You realize that the housing supply remains tight, meaning that if this trend continues, sustained upward momentum in prices in the months could come because of it. Now, looking ahead, investors can expect to see some continued volatility and potentially some short market declines, because whenever markets approach or achieve new market highs like the S&P 500 at 1700, it's normal for there to be a market pullback as traders consolidate and sell out their positions to take profits. Now, if we look at the Federal Reserve, they haven't set any official date for quantitative easing tapering, but if economic fundamentals continue through August, they may start tapering as quickly as September's meeting. So investors may respond very nervously to this information, causing additional volatility in the markets. But as always, we'll continue to monitor the situation and keep our clients informed. Now, there are some upcoming events here at SWAN Capital. We have 3 veteran benefit projects to share with you how to receive up to $24,000 from the VA to help pay for assisted living, nursing home expenses, and home health care expenses. So you don't want to miss these workshops. Also, we have a Social Security Benefits Class 101 where we peel back the onion on Social Security benefits, and we'll share with you how Social Security was designed. What's the future of Social Security? How do you maximize benefits? And finally, when to take Social Security. So you don't want to miss these upcoming classes and workshops. You should check out swan-capital.com under the upcoming events tab to learn more about these events. And if you found any of this information informative, please give us a call at 850-380-9558. That's 850-380-9558. And we'd be happy to discuss anything you've learned during this video, or just like to discuss your personal financial situation. Talk to you soon. See you next time.